Hey guys, it is Julie here with TipRanks, and today we're taking a look at two chip stocks with buy ratings from a top-ranked analyst. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two chip stocks that not only come in with a strong buy consensus from Wall Street, but also have buy ratings from one of the top ranked tech analysts out there. We're going to take a look at these companies, what it is that they do, and what kind of growth these analysts are predicting. Now this top analyst that we're referring to today is Needham's Quinn Bolton. With a 5-star rating, Quinn currently is ranked number 4 out of over 8,500 Wall Street analysts. In the past year, he's had a success rate of 67% and an average return of 36%. Jumping right into these strong buy chip stocks, one that Quinn has recently rated is Lattice Semiconductor. They trade under the ticker LSCC, currently priced above $66 per share. Now, the stock has seen some rise and fall this past year, overall being up 4%. But if we look in the last 6 months and 3 months here, the stock has actually been on the decline, down 26% in the last 3 months. Lattice Semiconductor specializes in low-power programmable semiconductor chips, with product lines designed to solve customer problems in the automotive, communications, computing, consumer, and industrial markets. They've staked out a niche in the market for FPGAs, or field programmable gate array chips. These specialized semiconductor chips are found in a wide range of products that are used particularly in edge computing, AI apps, robotics, IoT, and autonomous driving. Lattice has maintained a steady upward trend in both earnings and revenue for basically every quarter over the last few years, and we're hoping that trend continues. Today, actually, their earnings report is coming out after hours on October 30th. Analysts will be looking for earnings per share of 52 cents, which would be a 4-cent year-over-year growth. This follows their last quarter in July, where they came out with an earnings beat at 52 cents, and the company saw their revenue grow 18% year-over-year. Our top analyst, Quinn Bolton, weighed in on the Lattice stock just last week. He noted that he was impressed with the company's leadership and their solid niche position. He wrote that under the leadership team of Jim Anderson, Lattice has expanded its low-end FPGA product portfolio with its Nexus platform and is more than doubling its total addressable market by entering the mid-range segment with its Avant platform. We believe the company will generate multi-year double-digit revenue growth. Despite not being a direct play on AI, we believe the company should trade at a premium to its peers based on strong organic growth expectations, diversified customers, exposure to attractive end markets and geographies, industry-leading gross and operating margins, sticky wins, and lack of political export control risk. He is one of 8 analysts weighing in on the Lattice Semiconductor stock, and it does come in as a strong buy with 7 buys and just 1 hold. The average price target for the stock comes in just above $100 per share, which would be an impressive upside of 49% from current prices. Here we can see Quinn's price target at $90 would be an upside of about 35%. On the low end, we do have a hold rating, but it's still at $90, so an impressive upside there, and a high-end price target at over 64% upside. Next up, we're taking a look at Smart Global Holdings. Their stock trades under the ticker SGH, currently priced at $13.50 per share. Now, they've had an interesting year. You can see they had some huge growth here going into the summer, but recently took a big drop off. Here on October 11th, the stock plunged. They're down about 50% in the last 3 months. And that big drop-off had to do with their last quarterly report, but we're going to get to that in just a second. First, so you know who Smart Global Holdings is, they are a small-cap chip maker that works through a variety of subsidiary companies. They design and develop lines of high-end semiconductor chips for computing, memory, and LED applications, and use their technical knowledge to create custom-engineered products that are the best in their class. Smart's products, which include DRAM, flash storage, and solid-state memory circuits, are found in a wide range of small electronics, from smartphones and tablets to laptops and desktops, and LED flat-screen displays and lighting systems. Now, this past year, the company experienced deceleration and a decline in their quarterly earnings and revenue. The company responded with a strategic shift and said that they're working to improve gross margins. As part of the shift, the company announced that their wholly owned Smart Modular Technologies subsidiary had entered into a definitive agreement to sell a majority stake, 81% of their Smart Modular Brazil. The transaction is expected to close in late 2023 or early 2024. and losses due to that transaction did impact their last quarterly report. For their fourth quarter, they did report revenues of $316.7 million, and that did decline 12% year over year. Earnings per share came in at 35 cents, falling 11 cents short of analyst expectations. But despite this, our top analyst Quinn Bolton did come out with a buy rating. He said that we believe Smart Global Holdings stands to benefit from multiple secular tailwinds and a recovery in the memory cycle. We view the memory solution segment as a reliable source of revenue and cash flow, the LED segment as an opportunistic acquisition with levers to enhance profitability, and the IPS segment as the long-term growth driver. And other analysts seem to agree. While there are only 4 current analyst ratings on the stock, they do all come in with a buy. That strong buy rating comes with a price target of over $24 per share, which would be an upside potential of nearly 80%. Down below, we can see those 4 ratings all coming in following that earnings report. Quinn's price target would be an upside of 63% and is actually our low-end price target, while we have another analyst from Stifel Nicholas coming out with a price target of over 92% upside. So there we have 2 chip stocks, both with buy ratings from a top-ranked tech analyst and coming out with some bullish price targets, despite the stock's recent activity. Let me know what you think of these 2 companies, and if you think they're due for a recovery or not. I always love hearing from you guys. Keep in mind that these videos are never a suggestion to buy or sell any specific stock. Please make sure you're always doing your own research and due diligence and stick to your own investing plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.